Hey, welcome back. December 8th, and Bitcoin is hovering just hitting the $100,000. So we just managed to recover the $100,000 today. So that's great news. Today's episode, I want to just concentrate on the reasons why I believe Bitcoin is a much more interesting investment than, let's say, real estate. There's quite a few fallacies from this person who wrote this article, and I'll explain why I believe there are indeed fallacies if you compare it with a much harder leading digital asset, which is Bitcoin. Now, let's go through each of the reasons in turn. This person thinks that the real estate, the historical returns, has kept pace with inflation. Now, it depends how you measure inflation, because as we all know, the consumer price index, which is pretty much the most infamous basket or indicator which all of the governments, particularly Western governments, tend to use when they measure the yardstick in comparison to inflation. Well, it beats the 2-3%, but in reality, the real rate of inflation is much more than that, because they don't account for things like food or energy, which obviously brings the inflation to a much higher level than the traditional 2-3% CPI indices. On that basis, this is a fallacy, right? And even less so if you bear in mind that with the famous money printing machine that the central banks and governments have at their disposal, whenever they hit the famous button on the money printing machine, well, that actually debases all of the assets and savings that people have automatically, including real estate, right? So if you put yourself in a situation where you bought, let's say, a property, it's not the same amount if you purchase it 20-30 years down the line. You think that the price have gone up, but in reality, because of the currency debasement and particularly the willy-nilly activity of governments to print the money, so it overinflates the supply of new money coming into the economy, that increases the currency debasement. It devalues the rest of our savings in real estate, and that's why you see it costs much more to buy a property, in fact the same property, 20-30 years ago. So this is a fallacy when the historic returns have not kept in pace with inflation. So that is fallacy number one. If we move on to the next reason, real estate has proven stability. Well, in fact, neither real estate or any other intangible asset has proven to be stable, right? So again, I don't understand why really there's just a complete set of fallacies and lies. Real estate is not a proven stability. I mean, how can you say that, right? For the reasons I just mentioned, just the fact that over the years, printing more money into the economy, it devalues all of the savings, all of the assets, the real estate in terms of net value. And as a result, it's unstable as a saving. So it's just not true. Real estate is tangible. It's fair to say that real estate is an illiquid asset, which means it would take much more of an effort to actually sell the real estate, whether it's a home or a building, more so than if you were to sell a stock, whether it's a leading stock, which is much more liquid. You can easily sell it in a matter of a few hours, right? During the opening hours of the financial market. So when they say real estate is tangible, it's not tangible. It's tangible in the sense that it's a physical asset, yes, but it's completely illiquid. Okay, Bitcoin is not tangible, but it is true that it is growing in popularity. It has received the approvals from many of the financial regulators out there in the world. In the case of the US, it is now treated as a recognized commodity. So it means it's a commodity without an issuer. It's not a security. It's not a company or CEO. There's over $2 trillion investment into the Bitcoin network. Leading institutions are now starting to incorporate Bitcoin in its corporate treasury reserve. And when the FASB rules come into effect, which is the new fair value accounting rules come into effect for US publicly registered companies in January next year, that would mean that the companies can now start to recognize the upside and the downside of the value of Bitcoin in their corporate treasury reserves, which until now they were unable to do. So, I mean, there's several reasons, right? It's becoming more institutionalized as an asset. It's not a risk-on asset. It's now becoming rapidly a risk-off asset, and it's becoming less intangible through time, as more and more companies, more and more nation states adopting Bitcoin in its sovereign treasury, and indeed net worth individuals and retail investors like you and I are increasingly incorporating Bitcoin in our personal portfolios. So this is really not the case. Real estate brings in income. Well, to a certain extent. Gross income, yes, can bring gross income. But if you net off all of the cost elements in maintaining the real estate, let's say the upkeep of the house, the flat, in terms of maintenance cost, in terms of taxation cost, in terms of house insurance cost, and if you were to maintain the same cost base year on year, if you were to apply the compound annual growth rate, instead of becoming a compound annual growth rate for real estate upkeep, it rapidly becomes the opposite effect. It's a negative growth rate, purely because of these upkeep in costs, taxations, insurances, right? It rapidly brings the value of the real estate. If you think about it, trying to hold it in the next 20, 30, 40, 50 years, it rapidly brings the value of the property to zero. So, and the income, if you were to rent out to, let's say, some people, there's several costs, right? And also you have to take into fact that depending where you are in the world, particularly in other countries where property rights are not so robust, like in the US, it rapidly becomes more of a liability than an income. I mean, I can speak that from first-hand experience. I live in, I'm not going to name the country, in Western Europe, where the property rights are nowhere near as close as the US. And nevertheless, the cultural, albeit is for people to buy those second, third properties with the idea of using that to bring in extra income into the household. Because of the appalling property rights in the country, in addition to the painstaking process to kick off tenants off your property for whatever reason, if they're unable to keep up with payments, the monthly payments of the property that they rent out, the upkeep maintenance cost of the property, as I've mentioned, the taxes, the insurance over the course of time, instead of becoming an income, is becoming a liability, and as a result, a lost investment. Full stop. Real estate has tax benefits. Again, this is another fallacy. I've already gave the indications why it does not provide any tax incentive of owning a real estate because of the taxation element and so on. Bitcoin, on the other hand, they have more favorable taxes. And in fact, I made a podcast on the Czech Republic. They're planning to make capital gains tax on crypto and Bitcoin holdings tax-free from a capital gains perspective if you were to hold it for a minimum period of 3 years. That's what they're rushing through legislation through their local parliaments to actually put this into effect, which is great because it would attract much more investors, particularly crypto enthusiasts, the young entrepreneurships, and for the rest of us who are believers of crypto assets, particularly Bitcoin. They are attracting those kind of people to come into the country. So this is not true, right? If you compare Bitcoin with real estate, Bitcoin is rapidly becoming more of an incentive from a tax benefit perspective rather than real estate for the reason I just mentioned. And it's not just the Czech Republic going to be making capital gains tax exempt. There's a growing number of countries that are going to be following the footsteps. So the trend is set to continue in that direction. So this is, again, another fallacy and not true. Finally, Bitcoin is simply more volatile. It's true, right? It's a young asset, 15, 16 year asset, but given that there is so much liquid brought into the Bitcoin ecosystem, you've got the options market, you've got these Bitcoin spot ETFs approved in various countries in the US, in major capital markets around the world. We have Bitcoin bonds, which is what the likes of MicroStrategy are doing. They're issuing debt through bonds in order to have that volatility and bringing more liquidity into the shares, into the market space, so they can buy more Bitcoin with it. I think we've made inroads along that S-curve adoption in terms of volatility. And at some point, when it reaches at the very top end of the S-curve, the volatility is expected to reduce, right? So, and in fact, the volatility is not a fair argument that this only applies with Bitcoin. It implies indeed with every other type of asset out there, whether it's equities, stocks, there is volatility there. So Bitcoin is no different. And in fact, as I said, the expectation is for Bitcoin volatility is set to reduce as it becomes more embedded into the mainstream, into the global financial system. So all in all, these reasons, in summary, where this person believes that real estate is a much better investment than Bitcoin, it's just not true. It just doesn't stack up, and you should be wary. This is all the more reason why you should dedicate a bit of time to do that research and start investing small amounts of your portfolio, in line with your risk appetite, of course, into Bitcoin. And the trick is to hold it for the long term, minimum 10 years, which is how I'm doing it with my own Bitcoin holdings. This is something that I'm I've always planned to do in order to generate that intergenerational wealth in the long run. It's not something that I would speculate with. For that, you have the stock options, you got the commodities and other crypto assets. It's not the case with Bitcoin. Bitcoin is, it has a finality in it. It's a scarce asset. There's only going to be 21 million Bitcoin in circulation. We're almost around 20 million that's what being produced. And there's another 100 years to actually generate the remaining 1 million Bitcoins. And as a result, the demand is high, right? So it overstrips the current supply of the Bitcoins available in the network. So for those reasons alone, as I've mentioned throughout this episode, the expectation for the price for Bitcoin in the long run, not in the short run, in the long run is going to be quite significant and very, very buoyant, which makes it a rather interesting asset to include in your portfolio. So hopefully you enjoyed today's episode. If you have, don't forget to hit the like button and subscribe to my channel, as I regularly make some interesting podcasts such as this. So I'll see you next time.